an anxious market, a turbulent tech trade, and what to do about it. Let's ask our panel. Trivariate's Adam Parker, Hightower Stephanie Link, iCapital's Sonali Basak. Adam and Stephanie are both CNBC contributors. It's great to have everybody with us. Sonali, I'll turn to you first because you're sitting with me right here at Post 9 at the New York Stock Exchange. What's going on in this market?
You know, it's interesting. We've been saying for months, right, that the tech trade would get more selective as things start to get hashed out. It's not always going to be pretty. I think what's interesting about today is signs of any contraction here in credit markets as it pertains to that big tech trade. Now, what I'm hearing here is that really this might be an idiosyncratic issue when it comes to this site, when it comes to the Oracle project, but it just shows you that these are not riskless propositions. There's a lot to consider when it comes to the build out. That means the localities, their feelings about these data centers, as well as the other infrastructure, and also the returns being demanded. Look at what is being demanded just on other Oracle sites, north of 25%. So certainly investors want to be compensated for that risk.
Adam, have we hit some kind of inflection point here in the AI trade? I mean, what is happening that the market is all of a sudden so concerned about certain things and certain stocks?
Yeah, I mean, look, we published over the weekend, I think you saw that you're not seeing the multiples, the enterprise value forecasted sales expand for some of the original winners. So whether it's NVIDIA, Broadcom, AMD, the multiples have peaked. So for the trade to keep working, I think, and get back on track, you need the fundamentals to come through. And I think you'll see that. I don't think it's over. I think you'll see that in January and April. I think what hurts the people I talk to, the most institutional investors trying to beat the S&P 500, what will hurt them the most is if the grade 8 outperform the market. I mean, every year ahead outlook that I've seen or that, investors have told me about is, well, we're kind of bullish on the market, but we think the grade 8 will lag and there'll be diversification. So that, if you want to be contrarian, you say we're getting close to buying these things and they outperform again in 26. I agree with the comments. We talked about it last week's show. I think Oracle also has some idiosyncratic stuff on top of it. And I think the market's worried about two things that cause every peak, Scott, which is arrogance and debt. And the market's got some of that in the AI space for sure.
Steph, is that how you see it as well? I mean, as goes Oracle, seems so goes the AI trade in general. It's just not going to find any traction, it doesn't appear, if this continues to go, Stephanie, the way that it is now.
Look, Oracle is a real concern, and the CDS spreads are telling you that, at up 153 versus February lows that up 33. It's not disaster, but it's concerning, and it's all about the financing and the lack of understanding of what they're going to do. This is all because they're going to have negative $21 billion in free cash flow next year. You want to contrast that to something like Broadcom, which has lost their multiple from 40 times to 32 times in a week because in sympathy with Oracle, but they're growing 40% in earnings. You're almost at a one peg for one of the best custom ASIC companies in the industry. And they are going to have $46 billion in free cash flow next year. And oh, by the way, that's up 71% year over year. So I think you have to be very careful on what you're picking within the AI, especially in the technology side, because all of these stocks have had tremendous runs over the last several years. But where the fundamentals are not getting rewarded, that's where you do your homework, you roll up your sleeves, and you look at some of the numbers. Broadcom's AI growth was 70% in this past quarter. Guidance is 100%. Their backlog up $72 billion for the next 18 months. These are real numbers. But again, it goes back to cash flow. They don't have to go to the debt markets. They can fund this all out and continue to grow and expand. And so there's a lot of companies that are great that you can own that are getting thrown out with the Oracle concerns. And I would add industrials, utilities, and also the power companies, healthcare companies. A lot of companies are going to see benefits from AI. And right now they're just throwing everything out.